The New Zealand versus U.S. dollar is moving to new session lows. The reason is the headlines that President Trump may look to apply reciprocal tariffs to other nations, and that has the dollar moving to the upside, the New Zealand versus U.S. dollar moving to the downside. I'll talk about the technicals that are in play for this currency pair as we head into the weekend and as we head into the new trading week. So let's get started. Before we look at the price action currently, recall from Friday's trade of last week, the price gapped lower into Monday, coming into this swing area here and then moving even further to the downside, taking the price below the low price that we saw here in the month of January. That low came in at 0.55153, but then we started to rebound back to the upside. We started to get back above this level right through here. We started to see more buying take place. It wasn't until the price moved back above this swing area, however, when we saw increased momentum to the upside. And the key level on the corrective move right here was the holding of this swing area between 0.55812 and 0.55918. That helped to push the price up to the 200-hour moving average on Tuesday's trade, and then on Wednesday's trade, we held a 61.8% retracement move higher into this swing area up through here. This swing area is defined by a number of different swing highs right here, forming a ceiling. We broke above the ceiling, tried to use this level as support, couldn't do it, found willing sellers, pushed the price to the downside here, came back, tested it right here. And in trading on Wednesday, the price actually moved above that level, reaching the high for the week before rotating back to the downside. In trading today, we found increased selling against that swing area through here, which increases this level's importance not only today but going forward. The level comes between 0.5683 and 0.56946. As long as the price can remain below that level, the buyers or the sellers are in play. Okay, and that's what we saw. What we saw with the selling here today in the last few hours, with the Trump tariff, reciprocal tariff news pushing the price to new session lows. Now that move to the low has reached another key technical target on the downside. The first level is a 61.8% retracement of the move down from our high price that we saw in the month of January to the low price that we saw at the beginning of February. That level comes in at 0.56434. We also moved to the 200-hour moving average. That's a green line. I just covered it with the red line right here. But the green line is also at that same level at 0.56434. So the price has bounced a little bit higher, but we remain below the 100-hour moving average at 0.56526. So this area with the cluster of 100-hour moving average, 200-hour moving average, 61.8% retracement becomes the key barometer for buyers and sellers today and going forward. If the price moves above it, it's more bullish. If the price moves below it, it's more bearish. On the downside, we have the 50% retracement as the next key target on the downside to get to and through. If we fall below that level, then it opens the door for further selling, perhaps toward this swing area where, once again, we based on trading on Tuesday before moving to the upside. So be aware of that. Conversely, if we move back above the 100-hour moving average, we stay within the upper region of this week's trading range. We stay above the 100 and 200-hour moving average, above the 61.8% retracement. That leaves the door open for further momentum with the swing area up here. Obviously, the next key target, that area did a pretty decent job of holding resistance and trading this week, with the exception of these few hours right here where the market extended to the upside, tried to get to our other high levels right through here, but found willing sellers. So that's my technical look at the New Zealand versus U.S. dollars. We end the trading week and look toward the new trading week next week. Good fortune with the trading. Bye-bye now.